Hi, it's Mike Carpenter again, licensed mortgage broker in the state of Washington, frequently and sometimes affectionately known as Mike the Money Man, and my license number is 111356. So in this segment, we're going to talk about loan types and loan limits. We're going to talk about what an ARM is and what fixed rate is. We're also going to talk about conforming loan limits, high balance conforming loan limits, and what a jumbo loan is. We're going to talk about the new 2019 conforming loan limits, and we'll talk about the old or outgoing 2018 loan limits. And we're also going to talk about what a unit is, 1 unit, 2 unit, 3 unit, and 4 unit, and what the loan limits are for those loans. So here we go. There's something called loan types. And something called loan limits. There are two broad categories of loan types. Fixed and adjustable rate mortgages. And there's also something called balloons, which are pretty rare. And then there's something called interest-only loans, which are kind of making a comeback after the mortgage crisis, but still aren't very common. So we're not going to really talk about those. If you'd like to know more about interest-onlys or more about balloons, let me know and I can send you an email. Or you can send me an email and we'll figure it out. So adjustable rate mortgages typically come in 3-year, 5-year, 7-year, and 10-year. And I'm not going to go into the mechanics of ARMs, and I'm not going to really talk about ARMs in this video because I'm going to dedicate another video to ARMs. So stay tuned. But there are the fixed run typically 10-year, 15-year, 20-year, and 30-year. 30 years being the most common. But you can get a custom amortization. There are some lenders, not all of them, but there are some lenders that provide, say, a 12-year amortization or, say, a 17-year amortization or, say, a 23-year amortization, depending upon when you want the loan to pay off. Not all of them do that, but some of them do. Again, the vast majority of of loans that I do are 30-year fixed. But what is more important is loan limits. So there's something called the conforming loan limit, something called the high balance conforming loan limit, and something called the jumbo loan limit. Actually, jumbos don't have loan limits. It's any. We can talk about that. So every year, the Federal Housing Finance Authority comes up with what the conforming and high balance conforming loan limits will be for that given year. And in 2019, they just raised them. So in 2018, the conforming loan limit in King, Pierce, and Snohomish counties was $453,100. And the high balance conforming loan limit was $667. And that was for King, Pierce, and Snohomish. Let's write that down. King, Pierce, and Snohomish. All other counties in Washington, the conforming loan limit or the maximum conforming loan limit was $553,100. Just in Pierce, King, and Snohomish counties did it go to $667 because presumably houses are more expensive in King, Pierce, and Snohomish counties. So in 2018, the conforming was $453,100, and the high balance conforming was $667. In 2019, they've just raised that, and the conforming is $484,000. 4,350. And the high balance conforming is 726,525. So the good news is they've raised the loan limits and more people can qualify for the conforming and the high balance conforming. So why is that important? I'm going to use a different color to emphasize that. So Fannie and Freddie Mac, they come up with the underwriting guidelines that dictate the conforming and high balance conforming rules. What you can, rules like what the maximum debt to income ratio is and how much of a gift fund you can use and where your funds can come from. They dictate the underwriting guidelines in an annual document called the 4.001, which very long document that talks about what borrowers can do and what they can't do. But when you slip over into the jumbo category, each lender has a different underwriting guideline. So each lender follows this underwriting guideline for conforming and high balance conforming. But each lender in the jumbo category makes up its own rules associated with how to underwrite that loan. And it may differ from, say Chase to, say, Wells Fargo or, Bank of America. Each might have slightly different underwriting guidelines. And jumbo loans typically require 20% down. You can get a 5% down jumbo, but the rate would be pretty high. Typically on a conforming loan, you can put 3% down, but the most common is 5% down. On a high balance conforming loan, you can put as little as 5% down, and it's typical to put 10% down. But on a jumbo loan, it's typically 20%. And we had talked about there's a video on debt to income ratio, and I think that we said we talked about a 45% debt to income ratio for loans of this in high balance and conforming. For jumbos, it could range as little as 38% to as high as 43%. But usually there's a debt to income ratio restriction on jumbo loans. And also on jumbo loans, there's something called a reserve requirement. Reserves are typically how much money you've got left after you buy the house set aside in reserves. And you can have as little as zero reserves for a conforming or high balance conforming loan, but for a jumbo, it's kind of a different story. So why is this important? It's important to figure out what price point you're in so you understand what kind of debt to income ratio and what kind of reserve requirements you're up against. And if you got any questions about that, feel free to email me. Let me draw yet another little diagram here. So when you're talking about loans, conforming, or high balance conforming, or jumbo. When you talk about a conventional loan, typically conventional loans go all the way up to the high balance conforming loan limit, and so do FHA loans. And typically so do VA loans. And there's a notable exception on VA loans in which you can go into the jumbo category under certain rules. And I'll cover that in the video on VA loans specifically. I won't go into it here. So if someone were to come to me and say, can I get an FHA loan with a loan amount of $800,000? The answer is no, because it exceeds the high balance conforming loan limit. Can I get an $800,000 loan for a conforming loan? And the answer would be no, of course, because you can't go above the high balance conforming loan limit. And can I get a VA loan? Typically, the answer is no, with some exception, which I won't cover in this email. or excuse me, in this video. But I also wanted to talk about units really quickly. I'm running out of space here, but I'll use a different color and talk about units. So when you buy a single family residence, I'll try to step out of the way here. When you buy a single family residence, that's considered a one unit property. Hence the single family part of it. But there's something called a 2-unit or a duplex. There's something called a 3-unit or a triplex. And there's something called a 4-unit, which, strangely enough, is called a 4-plex. And these have different conforming loan limits, and I'll illustrate them over here because I'm running out of room. For 2019, 1 unit, we just talked about it, the high balance conforming is $726,525, and that's the maximum loan amount. 2-unit or a duplex is $930,300. Again, loan amount. A 3-unit or a triplex is $1,124,475 for 2019, and a 4-unit or a 4-plex is $1,397,400. Again, this is loan amount. So, I'm running out of space. I hope this was clear. Please let me know if you have any questions. You can always email me, and I'm happy to answer your questions for you. So, thanks for watching my video. I hope you found it useful and informative. It's intended as a broad overview of the material so that you may have some further questions. Feel free to ask them, and I'll be happy to answer them as best I can. Share, like, and subscribe, but share it with somebody who can actually use it. Maybe someone who's going through the loan process and is a little confused. Hope they get something out of it as well. So happy viewing. There's more to the series. Hope you enjoy the rest of the videos. Thank you. And now for a quick disclaimer. So these videos are intended for informational purposes only. So don't rely on them for making important financial decisions, especially decisions concerning your housing. If you've got any questions about how this information applies to your given situation or your given transaction, please contact your mortgage broker directly, and they can give you advice. And any rate, fee, cost, or loan limit information was accurate at the time that the video was made, but may not be currently accurate because underwriting guidelines change all the time. So if you've got any questions about how this information relates to you specifically, contact your mortgage broker. So I hope you continue to enjoy the series. Thanks.